G'day everyone, Greg Canavan with you for another Rum Rebellion update. This week we're going to cover quite a few different markets, so we'll get stuck straight into it. A couple of weeks ago we talked about gold and how it was rallying quite strongly. At the end of last week we saw a bit of a sell-off in gold, so I want to have a look at that chart to start off with and just see how things are travelling in that market. As you can see, we saw a spike down in Friday's trading in the US, so that brings gold back down into the 1290 region. Broken a little bit through that support area that I've got with the green line there, marked just above $1,300 an ounce. I don't think that's anything to be too concerned about. When I discussed gold a few weeks ago, I said if it breaks through the 1360, 1370 level, there's pretty much clear air above that, and I think we're going to see a big bull market take gold to new all-time highs in US dollars. But that's going to take a little while to happen. We're not going to go straight from lows and break through that point and keep going higher. So I think over the next couple of months, you'll see gold correct, consolidate. The move that we've seen from August last year up to the highs around 1350 just recently. Often when an asset or an indice does make a decent move like that, it does correct and consolidate and takes a little while to build a base to move higher once again. So I think you're going to see a few months of sideways movement with gold, but I would take that as a bullish consolidation period, and especially considering, as you can see on the moving averages there, they're still trending nicely higher. I would look at that as buying opportunities for any stocks that might pull back by a decent amount, with short-term investors, deciding to get out if they think the market's done for the time being. So longer-term investors, I'd see that as a buying opportunity. The other thing to point out with the next chart is this is the US dollar index. And really that's just moved sideways over the past sort of 4, 5, 6 months. There is an argument to say that it could be a bit of a rolling top here for the US dollar. You'd want to see the lows broken there below 95 to confirm that. But the point I wanted to make here just now is that the gold price has actually performed quite strongly while the US dollar has, I guess, stayed in an bit of an upward trend. So that is also I guess, a positive for the gold price in that it's done well at the same time as the US dollar has done quite strongly. So still looking good for gold. I think longer term, as I said, probably shorter term pullback, but that should be used to accumulate if you're buying, or to initiate new positions if you wanted to get into the market. All right, moving on. The next one here. Now I wrote about the Nasdaq, and I've been writing about the Nasdaq quite a bit in the Rum Rebellion, in terms of it being a bit of a leading indicator for the global equity bull market. Now last week I showed a really longer term chart of the Nasdaq for a bit of perspective. So let's take a look at that now. And the reason I pointed out this longer term chart was just to I guess give some perspective on this recent bounce. You saw a really sharp move down in the latter part of 2018. We've seen a strong bounce now. But what I'm hinting at here is that we could be seeing a bit of a head and shoulders top pattern. Now the head and shoulders top is, look, it's not something that I follow too closely in terms of the technicals. I keep my technical analysis pretty basic, but it does look to be forming here on the Nasdaq. So you've got a shoulder there, a left shoulder moving up into a head. We saw a big pullback, and we could be seeing a right shoulder formation now. And if that's happening, that could take a couple more months of back and forward or consolidation before you see another a leg down. The other point to note about this chart is that if you're bullish, then it's a low probability move to think that you're going to see the Nasdaq head back to new all-time highs anytime soon. Not saying it can't happen, but it would be a low probability move to see that recovery continue all the way through, smashing through 8,000 points to new all-time highs. And just to reinforce that, this is a chart of Amazon. One of the comments that was left in the YouTube channel a few weeks ago was to forget about gold and to get on to Amazon. It was the trade of a lifetime, or words to that effect. Certainly that has been the case, but I seriously doubt that will be the case from here on. And the Amazon share price looks more like Bitcoin did at the end of, or probably at the start of 2018, as that bubble had burst. And this seriously looks like I guess the bubble bursting for Amazon here. massive run up. Really, the run up started in 2015 and it really went vertical through 2018. Massive big pullback, and then you've seen a bit of a rally, bit of indecision around here. But to me, that looks like a bubble bursting. Might take months more, or even the duration of 2019 for that to play out. But given that Amazon is, I guess, the poster child for the NASDAQ and for the FANG stocks, this just really says to me that it's a low probability play to think that the whole Amazon and FANG section of the market is going to continue to move higher. Okay, so let's go on to a few more charts. I guess the reasoning behind these couple of charts is just to show you the indecision that's happening in the market right now. If you're a bear, I can get you a number of charts or give you a number of data points to point or to paint a bearish picture. Same as if you're bullish, there's a number of data points to show the bullish side. So I'm just going to run through a couple of quick charts now and show you both sides of the story. And really, the point of doing this is to show you that there is a lot of indecision in the market right now and a lot of uncertainty as to which way the market's going. So the first chart I want to show you just on that, the oil price. We've had a massive big pullback in oil, as you know, in the latter half of 2018. Bit of a recovery happening there, but the moving averages still indicate that the trend is down, and we have seen a bit of a stalling of the oil price there. Obviously, oil is very highly correlated to economic growth and economic activity around the world. So the fact that that's stalled there is a little bit of a warning sign or a note of caution. And the other thing that I've pointed out here occasionally as well is the US 10-year Treasury note. When the yield is heading higher, that indicates that the economy is expanding, inflationary pressures are building, interest rates are moving higher, and that's all I guess, bullish activity. Now, at the end of 2018, the Treasury note fell quite sharply, along with the equity market. But the equity market's rebounded and the Treasury yields have failed to rebound, and they're still stuck below support there. I've drawn a support line at 2.8% on the US Treasury note, and the bonds are still yielding below that. So that indicates that the Treasury market or the bond market is still quite skeptical about this rebound and thinks that the US economy is still quite weak or going into a period of weakness down the track. In saying that, there are still some bullish data points, so we'll have a look at those. China being one over the past couple of weeks, and that's obviously related to the supposed resolution of the US-Chinese trade talks. But the Chinese stock market, as you can see there, rallied really strongly the past couple of weeks, broken up through support or what was previously resistance, broken up through there. But now it's sitting just around the 3,000 point level now. I'm not sure how closely you can see that, but this was where Chinese stocks broke down in May last year and headed into that sharp bear market. So it's now, I guess, up against that level. So it'll be interesting to see whether the rally can continue or whether it's going to find resistance there and head back down. And that'll give you some sense of whether this is, effectively a relief rally on the hope that the trade talks will improve the situation for Chinese stocks, and whether there's some follow through from that, or whether it's really just a short-term rally and selling's going to continue through in the next couple of weeks. So that's one to keep an eye on. But short-term, that's certainly looking bullish. China's looking a lot better than it was just a few weeks ago. And possibly related to that is the copper price. Copper's fell quite heavily earlier on 2018. It consolidated there for a little while. Never really broke down to sort of really concerning levels. But just in the last couple of weeks, you've seen a good rebound in the copper price. Copper and China do go together quite a lot, so it's probably no surprise to see copper rallying at the same time as money moving back into the Chinese stock market. But certainly they're two things not to get or to give you some sort of confidence that the US or the global economy, if it is slowing down, it's not slowing down in a way that is going to create carnage for global stock markets. Point being, there's plenty for the bears and plenty for the bulls. Right now, I still maintain a bit of a bearish stance. I think that the rally in global stock markets has gone way too far given the fundamentals. But in saying that, I've been wrong for a number of weeks now, and I wouldn't be surprised if I'm wrong for another week. But we'll see how it goes, and I'll be back next week, and we'll give you another update then. Thank you.